option traders, for today's trade we are looking at a bullish option play in Lithium Maker Albemarle. Taking a look on MarketSmith, shares are fighting for support at their 50-day moving average as the stock continues to form a consolidation. This consolidation gives the stock a 308.34 buy point. It's important to note that while the stock has been rising over the past few weeks, volume has been decreasing, which is not necessarily a good sign. The relative strength line has also been pulling back recently. But with the stock above its 50-day line and earnings due after the close today, it's possible that a positive earnings report could push the lithium maker higher from here and closer towards the buy point. Today's trade is risky, and it may be too risky for some, but the idea is that a bull put spread could capture gains to the upside while capping downside losses. So, for more information on the bull put spread, this trade involves selling one put and buying a lower strike put. This creates a credit as the more expensive option is sold. So the goal is for the stock price to stay above the higher strike price to keep the full premium. This is a mildly bullish position, and the idea is that we sell a put just as we would a cash secured put, but simultaneously buy a lower strike put to protect the downside, just as we would with a protective put against long stock. A few positives to selling bull put spreads are that you get to collect a premium upfront for putting on the trade. This position allows you to be slightly bullish on the stock, but with limited downside risk. Bull put spreads look like a covered call, but without the maximum downside risk. Because the seller of the bull put spread collects premium, the position can profit if nothing happens to the stock. The bull put spread, however, does give up the upside above the higher strike put, so gains are also capped. The potential losses are capped with the stock price anywhere below the lower long strike put. So to summarize, the biggest advantages with bull put spreads are you get to collect the premium up front, you benefit from time decay in the trade, and you have limited risk. The biggest disadvantages are your gains are capped above a certain price, and the short put can get assigned. As for how to choose your strike prices, you'll look to sell at the money or out of the money puts. Choose a short put strike that you think the stock will not trade below before expiration. So now, with all that said, let's take a look at my trading platform and set up a real-life trade. So first, on your trading dashboard, make sure that you have ALB as your ticker symbol. And in this box, if you are on Thinkorswim, you can select vertical as your spread type. Down here in the middle, we have our strike prices, and we're going to be looking at the 250-260 strike price combination. And we're going to be on this side of the screen because this is where the prices are for put options. And if you click on these prices here, it'll pull up the trade for you down below. And just to recap, we are looking to sell one November 18th 260 put and buy one November 18th 250 put. We're looking at selling the November 18th 260 put and buying the 250 put to create the spread. Selling these two options generates roughly $260 in premium. The trade has a maximum risk of $740. The spread will achieve the maximum profit and expire worthless if the stock closes above 260 on November 18th. This would allow the trader to keep the 260 option premium. The maximum loss will occur if ALB closes below 250 on November 18th, which would see the investor lose $740 on the trade. The break-even point for the trade is $257.40, which is calculated as 260 minus the $2.60 option premium per contract. As always, remember that if you are new to this, make sure you practice with a virtual account before risking any real money, and please remember that options are complex and investors in some cases can lose 100% or more of their investment. Be sure to check out investors.com/options for more option trading tips.
Hey everyone, thanks so much for watching Investors Business Daily on YouTube. If you want to watch more videos, make sure you hit that subscribe button so you don't miss a thing.